Today, Bitcoin falls to the $86,000 level. Bank of America CEO says the company could make a stablecoin if the U.S. gets clear regulations. And Thomas Mattimore of ABC Labs discusses why Wall Street might want to bring more of its investments on-chain. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Crypto markets mixed this morning. As of noon Eastern, Bitcoin and Ether added to yesterday's losses, falling around 0.75%. Meanwhile, XRP climbed 1.8%. Okay, let's talk about the top stories. Bank of America CEO Brian Moynihan says the bank would consider a stablecoin if U.S. regulations allow it. Speaking at the Economic Club of Washington, D.C. on Tuesday, Moynihan said it's pretty clear dollar-backed stablecoins will garner mass adoption. He also said that if the Trump administration and lawmakers on Capitol Hill pass stablecoin legislation, Bank of America would go into the business of stablecoins. Now, that's not unlike the comments Moynihan made to CNBC at the World Economic Forum in Davos. Back in January, he said Bank of America and the broader banking industry would embrace crypto for payments if regulators allow it. Next, Circle's Jeremy Allaire says issuers of dollar-backed stablecoins should have to register in the United States. The CEO of the USDC issuer said in an interview with Bloomberg News that it, quote, shouldn't be a free pass and that you can't ignore U.S. law. Allaire also pointed to registration requirements as ways to bolster consumer protection and financial integrity. Allaire's comments come as stablecoins take center stage in the United States and competition is brewing. Circle is headquartered in the United States, while its biggest competitor, Tether, recently moved its headquarters from the British Virgin Islands to El Salvador. Tether's CEO, Paulo Arduino, said in a post on X Tuesday that competitors intend to kill Tether through business and political meetings to shape potential legislation to favor US-based businesses. All right, let's talk more about institutional crypto adoption for our main story. Crypto World's Tanea McKeel spoke with Thomas Mattimore, CEO of ABC Labs. The company is partnering with big names on Wall Street to bring TradFi on-chain, and he discusses the biggest catalysts and headwinds for adoption.
Thomas, thank you so much for joining me on Crypto World today. So ABC Labs is working with a bunch of major players, Bloomberg, CoinDesk, and others, to provide a way for investors to buy into on-chain indexes. Talk to me about what these on-chain products are first and foremost and their use cases.
Awesome. Tanea, thanks for having me on. Very excited to talk about all of this. You know, DTFs are like ETFs, but in crypto. And so all of these players that you mentioned, like Bloomberg, CoinDesk, Market Vector, they've actually partnered with us to launch DTFs on our platform today that let investors do everything from track the broad crypto market to track very specific sectors within the crypto market. We've seen over the last couple years now that, you know, crypto is very exciting. Everyone from retail to institutional wants to get exposure to crypto. And at the end of the day, it's hard to get exposure to crypto outside of, you know, the basic things like Bitcoin and Ethereum. And so by having access to DTFs, they can get access to that broader crypto market.
And go a little bit further on that for me, if you can. What exactly will these partnerships help unlock for investors?
Yeah, so the Bloomberg Galaxy Crypto Market Index, for instance, which is a index that Bloomberg Indices manages and tracks, is an index that tracks some of the largest assets within the crypto space. It's about 20 assets within crypto. You know, it's outside of just the normal ones like Bitcoin and Ethereum. It's also broader crypto assets. And so, you know, there's a $3 trillion market that is much more than just Bitcoin and Ethereum. And so, you know, by using an index like this, investors can invest in a DTF and get access to many more products.
So, Thomas, we're more than a year into spot crypto products on Wall Street. We've obviously, seen big inflows into Bitcoin ETFs from Wall Street. Less excitement so far on ETH ETFs. What is the sentiment like from institutions? Are they very targeted on Bitcoin? Are they crypto curious in other ways? What's the landscape like?
I think we're seeing a ton of excitement across the board. You know, we've seen, you know, like you mentioned, the Bitcoin ETF and the BlackRock one in particular was the fastest growing ETF of all time in the beginning, right? And we've seen a huge amount of ETFs actually get they've put in applications. I think it's over almost 100 applications have gone in for crypto-specific ETFs. We've also started to see more broad interest from institutions and from retail, just in crypto in general, right? Robinhood's revenue that was related to crypto went up 700% last quarter, right? Like 700 is a crazy number, right? And so it's not just retail, it's not just institutions. It's really everyone is looking to get broader access to crypto markets.
What's the biggest obstacle for Wall Street? Is it simply a lack of interest, or is there something on the regulatory side? What do you encounter at ABC Labs?
Yeah, we see a combination of a variety of things, and the great news is that there's progress on all these different fronts. On the regulatory side, there's been a lot of gray area for a very long time. 10 years ago, when I first started getting into crypto, if you told me that this would be like a major part of a presidential election and a major thing that all the financial regulators are talking about and thinking about, I would think you were kind of crazy, right? And here we are. We've got a crypto task force. Commissioner Peirce on the SEC is leading this amazing task force, which is showing great progress so far. Every week we hear great news about regulatory clarity that's coming. At the same time, some of this regulatory clarity is giving large players in the space the confidence that they can step in. Just this week, we saw Citadel announce that they're entering crypto, right? 2 weeks ago, we saw State Street and Citi and Schwab all announce that they're going to get into crypto trading and crypto custody. And so, having large market makers, having large trusted U.S. financial players get into the custody and the safe custody of crypto assets, these are all huge unlocks for institutional and retail customers in the U.S. and around the world.
Is the future of Wall Street on-chain public blockchains or private?
Privacy is an important thing. I think that hasn't quite been figured out in the crypto space. There's been a lot of great progress, both from a retail and from like a regulatory perspective. There's a lot of really tricky questions that regulators need to think about and figure out how to handle, and technology that needs to get built, candidly, to enable all of this. And so it'll be interesting to see how that plays out. We don't have an answer here at ABC Labs, but we're excited to see what happens.
Privacy has been an interesting one for the last decade, for sure. When we do finally move the needle on that, do you see that coming from the institutional side and the groups that are working with permissioned blockchains, or do you see it coming more from projects and companies that are working more on the retail side?
It's hard to say. I think that there's some use cases where privacy is critical, right? Like, I don't want my credit card transactions to necessarily be broadcasted to the world, right? But at the same time, transparency can actually be a huge feature. And so one of the things that we're excited about with DTFs in particular, for example, is that the reserves and the custody of the assets are very transparent and handled 24/7 in a way that only blockchains can enable. ETFs are sometimes a week, somewhere from a week to a day. Mutual funds are oftentimes, the proof of reserves is like 30 days later. What's backing the mutual fund is updated. And so a big feature of public blockchains is this transparency and 24/7 nature where people can check to make sure that what they think is happening is happening. And so on the question of privacy versus, public blockchains and public ledgers, I think there's big trade-offs in both directions. And it's going to be really interesting to see how it plays out. And I'm excited to see some of the progress that's happening on the regulatory front to get clarity on some of these questions around AML, KYC, all the above.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.